Navneet Munot is joining us right now. He's Chief Investment Officer at SBI Mutual Fund. Navneet, good morning. Good to have you with us here. Thanks very much. What is your assessment of the Bihar election impact for the financial world, financial market, Navneet?
So a lot has already been said about the overall implications from the political angle, but from the markets angle, I don't think the case for Indian equities has undergone a change. I don't think that the overall economic landscape is going to change dramatically. I don't think that policy direction is going to change dramatically. I think the government would be more keen to reach out to the opposition and get some of the critical bills passed. There is definitely a fear that the winter session may also get disrupted like the last session, with the opposition becoming more bold. But my sense is that I think government would try its best to get some of the key bills passed. Apart from the GST, we also have the bankruptcy law lined up. The another thing is that executive action is not going to change, and I think that's where a bigger focus is going to be with the Bihar election behind us. I think the focus is going to shift to the economy, and there the major focus is going to be on building the infrastructure which can create jobs and can get the economic momentum back. That's how I read the outcome of Bihar election.
Do you think this will make the government more conciliatory, reach out to the opposition? Because I think most investors that I've been speaking with also agree that the market requires some reform support. Valuations may not be very stretched, but with quarter after quarter earnings being poor, very poor, you need some help from somewhere else, and maybe reforms are one such area, one such input. But for that to happen, it's again a political tangle.
Yeah. So there are two things when we talk about the reforms. One is the reforms at the central level, which requires legislative changes like the passage of GST bill or a bankruptcy law, or let's say land or labor reforms. I think apart from one or two critical reforms, most of the other things are in the space of executive action, which the government can do without what it needs to get done from the parliament. I was just listening to an advertisement by Rajasthan government during the commercial break about the investment opportunities in Rajasthan, and to me I think a larger economic reforms are happening there. The whole cooperative federalism or the competitive federalism, where each state government is fighting against each other to attract FDI, to attract investment from domestic businesses, I think that's the bigger story going forward in terms of India's political economy. Almost every CM is understanding that growth on the ground has to be delivered to come back and then to win an election. And I think with the support of the central government, with what the state governments are doing, I don't think that the overall, as I mentioned earlier, that overall economic trajectory is going to change much after this election. You are absolutely right. One or two critical legislative changes that everybody has been waiting for, particularly the GST, I think everything else will get passed. Particularly GST, the government will have some difficult time, but my sense is that I think they will reach out to the opposition and ensure that over the next couple of months we get some of these reforms back on the agenda. The larger action remains on the executive side, both at the central as well as at the state government level.
Just a few days back, 2 days back actually, the government announced a 5% MSP increase for the Rabi crop. Now, we can debate about whether it is the right policy or not, but the government seems to be staying the course. Staying consistent with what it has done in the past. And this was right before the verdict in Bihar.
I completely agree. In fact, one of the one of the reason in Bihar where the government was criticized was the price of pulses. And I think it's becoming very clear for all the political parties that tolerance for high inflation is very limited in India. And I think over the last 18 months, one thing I would like to give credit to the government is to ensure everything possible to keep inflation under check. There are also agreement with the Reserve Bank to have the new monetary policy framework in place. I think both of them will ensure that we don't see the spike in food inflation that we have seen for several years in India. Having said that, the risk could come from global commodities. In case there is a sharp bounce back in China, in case the fiscal policy and monetary policy works there, and we see some spike in global commodities, or let's say because of the weather, food prices go up, that's a different thing. But keeping that aside, I think the government will ensure that because of its policies, food inflation doesn't go up in India, because the tolerance among the people for inflation is very, very low, which is a good thing in the long run.
Okay, so that is one, which is inflation, which you said, well, that could be one reason for the the outcome in Bihar. But what about the election? What is the election result in Bihar saying about some of the other sort of economic policies of the government at the center? Is it saying anything on that, or this is just purely a local? It was a local issue. It was a local election. So it would be wrong to extrapolate this result to what the government at the center is doing and whether people on the ground feel it is right or wrong.
First of all, before you put a flash that I mentioned that inflation is one of the reasons, not really. I was just mentioning that the price of pulses was talked about during the election. Overall inflation has been very well behaved in last 15 months. We have WPI negative and CPI at 4 or 5%. So I don't think inflation was a big deal. My point was on the pulses and the discussion it created. The other thing, I think the result, I think India has 28 states, and I think I got your point. I think to complete the point, I think there are 28 states. Every year will have 4 or 5 large elections. 4 or 5 state elections. There would be several local elections. I don't think that the majority that has been given to the central level should be kind of reassessed whether the people's mood has changed. I don't think so. Each state has its own dynamics in terms of political, social dynamics, which decide the political outcome, and in a 3 or 4 way contest there are lots of other things at play. So I don't think that market should read too much beyond a point that because of the defeat in Bihar, the overall economic policy making or the overall direction of the government is going to change. I think the government is quite committed to development. They are quite committed to create jobs. They are quite committed to keep inflation under check and to ensure a macroeconomic stability in India for next several years. And I think they are on the right path. Of course, looking at this mandate, they may have to introspect a little bit that what is that they could not appeal to people, what is that they need to get right in terms of communication or in terms of some of the other policies. But I think broadly I don't expect a change in the overall direction for the economic policy. On the contrary, I expect that execution is likely to pick up very significantly in next few months because we don't have any major state elections coming in, and that's where the focus is likely to shift.
Right, execution will pick up, not pursuing new reforms. Execution will pick up. But execution should have, I'm assuming, goes on anyway, any which way, right? Election, no election. But anyway, Navneet, let's come to the GST, right? The single biggest thing which markets, in a way, financial market participants are fixated on. GST, will it pass, not pass? I'm asking you, are you expecting the GST to pass in the winter session?
We'll have to wait and watch, but I think when I say execution, it's not about completing some stalled projects only. I think that DISCOM, what Mr. Piyush Goyal has done is a very significant reform. What's happening in the coal sector is a significant reform. What they are trying to do in the overall generation as well as the T&D space in power is a significant reform. The way they are trying to get investments into the railways, I think that's a significant reform. Whatever has been done on the banking side to revive the PSU banks, I think that's a significant reform. And I'm sure, I'm not saying that a lot of other things don't have to be done. There are a lot of other things that will be done, and that's the point I'm trying to make, that of course we have to wait and watch the winter session, and that's the fear at this point in time. But there are lots of other things outside the parliament which the executive can do, which I'm pretty sure that I think are on the right track, and we'll see the pace of that increasing over the next several months.
All the things that you call reform I agree with, except the DISCOM thing. I think that we should call for what it is, which is a kind of a bailout, really. It's not really a reform. Anyway, the rest, of course, I agree completely with everything else. The GST bit, I mean, you kind of, you said we'll have to wait and see, but I'm trying to get your expectations, Navneet. Are you expecting it to go through? Are you hopeful? Are you optimistic or not really? Winter session.
Now, I'm surely hopeful. All of us have been hopeful. But remember one thing that, India has got highest amount of FDI this year. The people who are investing in India who have never invested or never put up a plan, I'm sure they are taking a call that this is a democracy. Things may or may not happen at the pace that you like, but structurally this is where they would like to invest for next several decades. And I think even in the equity markets, that's a call we need to take. If we keep looking at that absolute clarity on every single thing, I don't think the equity markets would deliver the returns that it delivers. There would always be something which will be pending. I mean, let's say GST is passed and then we'll shift the discussion to US Federal Reserve. Then maybe the next quarter again, some more slowdown in China or some other reason. So we'll always have some or the other reason to talk about. But that's why the markets give you these kind of opportunities that you are getting today or maybe next couple of days.
Okay, fair enough. But that I was coming to that. I mean, so if, for example, if we say, okay, forget the Bihar result, it's 2-4% impact on the market, could last 2-3 days. Let's look at the economy. Let's look at corporate earnings. Let's look at global markets. But what is there to look at? Corporate earnings are poor. I mean, economy by most yardstick, except the GDP number seems to be stagnating. And globally, there seems to be, lack of growth across the board. So that's the problem. It's not just Bihar. I mean, Bihar, in a way, I was saying this morning, is kind of just tipping the market over. The rest of the setup was already ready for the market to head lower. Would you agree with me, Navneet?
So that's why Nifty is where it is today compared to where it was at the beginning of the year or the peak that it made a couple of quarters back, because I think the expectations on earnings have been getting deferred every quarter. My sense is that whichever way I look at it, the corporate profit to GDP, which is at a, I think, multi-year low, the overall profit growth, which is at a multi-year low, the margins, which are at multi-year low, the top line growth, which is probably because the nominal GDP itself is not growing, at a multi-year low. Looking at the global environment, a good part of the earnings that get impacted by the global cyclical reasons, they are suffering. But I think most of it is, to some extent, is in the price. And I expect that on this base from December onwards, we are likely to see a revival in the corporate earnings. As the government execution picks up on the investment cycle gets revived, and I'm quite hopeful on the urban consumption. There are all the signs that urban consumption is reviving. And I think both these put together with some stalled projects coming on track, the asset turnover goes up, margins move up with the cost pressures receding, and I think you overall have a better bottom line flowing in. And I think it's a matter of another quarter or two from the low base that it has created. We can expect a decent profitability growth for next couple of years.
Navneet, do you, now this is, I'm kind of sort of taking a roundabout approach to asking a simple question, but I'm going to do that anyway. Should one, if you're holding stocks, I mean, if you're an investor, do you think one can take a call, okay, I'm going to sell my, and if the notional investor that I'm talking about is sitting on gains, does it make sense for him or her to actually encash, take profits in the hope that they'd be able to actually find prices which are a lot more lower, a lot more attractive, buy the same names a lot lower?
So you just mentioned that earnings are depressed. You mentioned about the global environment. You mentioned about the outcome of the Bihar election. With all these negative news where the market is today, you will have to get much worse news going forward for prices to depress or for people to turn more bearish. I'm not very sure about that. Of course, there is going to be a rate hike in the United States next month, but I think markets are already started factoring in. In fact, contrary to what people expect, I think the overall volatility levels in global markets may actually go down post the US Fed hike because the event would be behind us. As I mentioned earlier, the earnings are depressed at this point in time. They are likely to recover. As I mentioned some time back, that I think the overall government's focus on increasing the execution of projects going to go up, and more decisions which have been pending likely to be taken. With all these in place, I think next couple of days, couple of weeks, markets are providing you a good entry opportunity rather than selling, booking the profits and hoping that something else will go wrong and I'm going to get much lower prices. I'm not predicting where the market would be next 10 or 15 or 20 days. There could be some bit of more volatility ahead. To me, I think that would be a good opportunity to buy stocks with 2-3 year point of view, or put money in mutual funds with a 2-3 year point of view, rather than getting swayed by the volatility that has been induced by the factors that we just discussed.
It's a pleasure, Navneet. Good speaking with you. Thanks very much for joining in with that perspective. Navneet Munot, SBI Mutual Fund, with that. Happy Diwali, Navneet, from all of us here at NDTV. Thank you.